How's it, guys? Welcome back to the channel. Thank you for tuning in. So this is my first time using a lot of equipment here. So I'm hoping that this turns out to be a great video, because I would not like to make it twice, because I feel like I'm going to be sharing a lot of valuable information. So I cannot afford to do the video twice, so I hope everything goes well, right? Today's video, I'm going to be showing you how to trade the silver bullet, right? I'm going to be showing you how to trade the ICT silver bullet. This is going to be an advanced lesson. We're going to be including liquidity concepts in our analysis. We're going to be coupling that with time and price, and we're going to be using all that within the scope of a daily bias, right? So with our daily bias, I'm just going to quickly introduce you, because I know you do not have access to these videos, whereby I've been keeping track of the price action, right? But the daily bias from the first video has always been, I'm going to show you in a moment, we've always had a bullish daily bias on the indices, right? So as you can see in this video, I was targeting 20,000, but the truth is, from my own personal trading, I am targeting obviously more than 20,000, right? So I'm still bullish on the indices, right? So without wasting any more time, now that we have the daily bias established, you could see that I'm operating within the scope of a daily bullish bias, right? So with that thinking in mind, we have the price action here on Wednesday. Wednesday day. So that was our true day, right? This is not really important, but I want to bring your attention to these lows here. Can you see that we had an area of equal lows? Like this area is just too smooth, right? It has equal lows. So on this day, after we create this high day at 450, and how do you know that that's going to be a very strong high? When you see price failing to break above this high day, that can many times suggest that we would most likely target the opposite side of liquidity, right? So in this case, if we fail to form a higher high, it goes without saying that the algorithm will most likely trade below this area of equal lows, right? So, but I want to bring your attention, remember this is a silver bullet video, so I want to bring your attention to the silver bullet, right? But based on the price action we are seeing from the London session, how I would view all this going into my silver bullet trade for the day is that, okay, we had a higher high here, and then we failed to form the higher high, right? So we had a lower high there, meaning we're most likely going for that, right? So at a point in time where we're gonna be looking at our silver bullet trade, right? Price, like we've established, is going to be trading below these lows, right? All this area of sell side liquidity, we're going to be trading below that, right? Specifically below these areas at the time of what? Of looking for our silver bullet trade, right? So let me go right into the silver bullet. I don't know if I should, but I'm going to go straight in Maybe let me just try. There you go. So let me go into the price action of the silver bullet setup and make more sense of it, right? So the silver bullet, we know from previous videos that it's from 10 o'clock to 11 o'clock, right? So like I mentioned, here in the New York session open, we were trading below this area of sell side, resting below this low, right? We formed the low there, 841, and then at 9:30, just before 9:30, we failed to go lower, right? So what did I say? When you see price failing to go to form the higher high, it means it's most likely going for the opposite end of liquidity. So in this case, if we are forming a low there and failing to form a lower low, it most likely means that we are going to target the opposite end of liquidity. Now, where is that? So remember, from the London session, when price was failing to form the higher low there and going lower throughout the London lunch and early New York, there were sellers in this market, right? So how you know that is that when price is trading lower, you know that there's going to be sellers in the marketplace selling as price goes lower, right? So those traders, they will most likely put their stop losses above previous highs, right? So the highest high would be this one. So when we fail to form the lower low there, it goes without saying that we can target this high, right? So that is the thinking I want you to have. Had you seen this price action real time for this day, right? Obviously, you need to understand that we're using hindsight, and obviously, I have the benefit of hindsight, but I'm trying to present to you a logic that works, right? So, like I said, 10 o'clock to 11 o'clock, that's the silver bullet time. Remember, I said it's going to be an advanced lesson, right? So, I'm going to be showing you a different level to the silver bullet, right? Because the silver bullet, people think is just a fair value gap. Well, it is, but what's more important, fair value gap is just a price element, right? The silver bullet, it's more of a time. Obviously, when you combine time and price, then you have your 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 golden trade, right? But the silver bullet, it's a time based model, right? So at 10 o'clock there, we do not have to see a fair value gap form for us to take advantage. With this trading below this, with this trading inside this old fair value gap, right? We have a fair value gap there. Inside this fair value gap, the fair value gap gets traded to there for the first time, right? Using these few candles there. But then, what time is it doing that? It's doing that at a time where we're not expecting too much movement in price. Now, when the silver bullet hour starts, the same fair value gap is still being used. Now, hence, we have the more dynamic move to the upside, right? It goes higher and then one more time, then goes higher eventually, right? So, let me quickly show you my analysis immediately. So, like I said, this fair value gap, that is our first entry for the silver bullet, because we can see this fair value gap being utilized there. What time is that candle? 10 o'clock, right? And we obviously know that for the silver bullet, we're looking at 10 a.m. to 11 a.m., right? New York time. So New York time, that's our silver bullet trade, right? So that's the first entry that you would have taken. it's inside this area, so it's in line with your market maker buy model conditions. You had smart money reversal at this low. At this low was our smart money reversal. This was our area of low risk buy, right? So this is gonna be our first stage, but you're not thinking about trading this because it's not within the scope of your time, which is this 1 hour, right? So when your time hits the fair value gap, still gets to be used for a what? For a second stage redistribution, right? In a buy model, targeting obviously the liquidity we spoke about, right? The liquidity we spoke about resting above this high from all the traders that were selling, right? So that's gonna be our first entry day. This would be an area of reaccumulation, but you're obviously not interested because when you're trading the silver bullet, it's you need to balance time and price. So time, we spoke about it a couple of times. Price, you're looking at your fair value gap, right? So you're looking at your fair value gap for the price element. For the price element, you're looking at the fair value gaps. So you're not necessarily interested in taking this rejection block entry there. That's not your entry. Your entry is what? Is the fair value gap that gets formed right there. Can you see this fair value gap? That's gonna be a second entry for you, right? So that's gonna be the first, second, or if you miss this and you use this for confirmation, this can be your first, this can be your second. Why is that your second? We have a fair value gap forming within our time element, and it gets used once day for the first time and for the second time day. But what time is that? That's after 11 o'clock. So that's not part of our model, right? So if we were to enter the trade, we would obviously enter within the 10 to 11 hour, right? Then you can see price obviously goes all the way higher. Why? Because you are trading within the scope of what? Your daily bias, right? Of which I've already submitted to you that I had a bullish daily bias from the beginning of June, right? So it's up to you whether you want to believe me or not. It's up to you whether you want to take my word. But I say give me the benefit of a doubt, right? Because I started the video showing you that I indeed had a bullish daily bias, right? So because you're trading in line with your daily bias, the moves are going to be more aggressive in the direction, right? You're going to have more bigger moves. Unlike if you have a bullish bias and then now you're trying to enter sells, you can see the selling trades, they just small retracement, right? So yeah, that is the silver bullet, an advanced lesson on it. Thank you for watching. I hope you learned something, and if you did, please take a moment to like and subscribe. It helps the algorithm show our videos to more people, right?